And let me say good morning one more time to everybody. Today's date is October 25th, 2023. It is a Wednesday morning and the market's not open yet. We're going to cover a few things, a couple charts, and take off for the day. Let's see. Let's do this. Let's start. Because since I have this up, figured out how to. You'd think I do this every day. You'd think I'd actually remember the keystrokes. I really don't sometimes. So today is Wednesday, right here. And a few things this morning. New home sales, EIA, petroleum report. Mr. Powell is going to bless us with his appearance or voice or whatever at 4:30 today, 4:35 today. So I'm always a little skeptical when they plan meetings after the market closes. I'm always a little skeptical of that. So careful. Be careful. There could be some surprise in there we don't know, and they don't want you to know till tomorrow. So all the big money can make their moves before us little peons can do anything. So a little cynical there, I know. So let's watch out today. There's some stuff today, and you can see tomorrow there's a few things we probably need to watch tomorrow. Yeah. Okay, let's get rid of that. Let's really get rid of this. We don't need this right here. And I just put this over here to remind everybody of some of the flagship strategies that we have. You know, pinball cross. There's several things that go along with the pinball. Trending flag setup, 3/8 trap, J-hook continuation pattern, pop out of the box. Trendicator 50 trap, round of bottom breakout, and the pinball setup. I'm going to move that over. There we go. And on the bearish side, it's pretty much the same thing on the bearish side. These are the chart patterns that I like to follow. And anyway, I just wanted to share those with you, post those out there. All right. So let's take a look at the SPY and what's going on this morning. Really, I see nothing of any super value that's going on this morning. Pretty much like it was yesterday. Let me get rid of this line right here. There we go. Pretty much like it was yesterday. So we started with a doji. We ended up with a doji 2 days ago, a doji yesterday. We're starting out this morning with a little bit of doji below the T-line, below the trendicator. So when it comes down to it, I have to just still be bearish. Certainly not overly bullish, okay? Now, there's going to be bullish charts out there. I get that. Just remember, you're going to have the weight of the market pushing on you until the market starts to move up. So right now, still bearish. If we can find where price action can get below the 500 period moving average, and if it can't get back up, that is going to not be pretty, I think. I think that's going to be ugly. Well, that'll be ugly for the bulls. That will be extremely gorgeous for the bears. So this little level here is important. Probably more important here than it is of breaking out. If price just wanted to move sideways and chop, that would make me okay. I'd rather it not move down here. But if it does, we need to be prepared. So if you're a shorter, if you like to short, have some short setups ready. If you don't like to short, take a look at the inverse ETFs. They are wonderful to trade. And you'll still get your short fix in, but yet you're trading long, okay? Let's take a look at IYT. There is nothing in the transports that are suggesting the bulls are stepping in. You know, there's a lot of people that think the doji is, you know, something magical. And really, it's like any other candle. It's the direction of any other candle is the direction you want to trade. And it's the same thing with a doji. So it doesn't matter whether we put a doji there. It doesn't matter. We could do the same thing with this candle. If we break out of this candle bullishly, that's the way we're going to trade. If we're going to break out bearishly, that's the way you're going to trade. Well, that's true with the doji. It's just a rest is all it is. Non-committal. I don't know what to do, you know. So we're going to trade the direction of the doji here. So nothing spectacular here in IYT, nothing at all. Let's take a look at SMH. SMH, we're actually setting up for one of those flagship strategies, the bearish H pattern. Dreaded H pattern is actually what it's called. And the dreaded H pattern looks like this right here. So that's not too good for the semiconductors, not good at all. The other pattern that we could be setting up for, very, very possible, is a low, high, higher low, which means we just might get a higher high. Now, that has to prove itself. We can't predict. We can look at a chart and we can say, what are our possibilities here? So possibility of something bullish, possibility of something bearish. And we're at that inflection point right now, that decision point. So this gives us something to look at for the day. If SMH does start to move up, that's going to help the big tech. If the big tech helps, that will help the whole market. If SMH continues to move down, that's going to put pressure on the big tech, or big tech's putting pressure on SMH, and that's not going to help the market. So XLI, let's look at that. Nothing there. Price still below the T-line, T-line below the trend indicator. Last night during the webinar, I had mentioned that trading is really simple. This is easy. You know, you put this on your chart and you follow this like clockwork. That's all you do. You don't get outside the lines too much. Stay in your box, stay in your world. This is really simple. Price is below the trend, or the T-line. The T-line is below the trend indicator. And two, I guess, are pointing down. Price can kind of fake you out. But if these two are pointing down, that's not hard to figure out, hey, we're going downhill. We want to go uphill, so we want them to start moving uphill, if you're bullish. Not hard. What is hard is what's between our ears. That's what's hard. Patience. Patience is hard. Patience to wait for that trade. Wait for that trade. That is extremely hard to do because we're traders. We're go-getters. We want to get out there and trade. We want to get something. But remember to trade smart, not wild, okay? Not smart, not wild. Anyway, XLI. Let's take a look at this T2122. We are still over in the oversold area. We're trying to pop up a little bit. And the SPY, if you look at the SPY, you've got, counting this morning's doji, 3 dojis in there right at the bottom. That could be a sign that we're going to see a little bit of a pop up here. I don't see it yet in my T2123, and I can live with the 60-minute not being up for a short period of time. But I cannot live with the 15-minute not being up. Until this turns bullish and we get a bullish trend that might look like this right, I don't even know, been so long, okay, like this right here. If we can't get a 15-minute bullish trend to look like that, then we've got nothing in the market worth trading 100% bullish, I should say, 100%. We just have no business being out there doing that. Little dabbles here and there, sure. Less money invested, maybe. Quicker on the profits, quicker on the target, or quicker on the profits, quicker on the stops, maybe. But this is what we want the 15-minute to look like. So where are we here? Back here. I don't have any charts to look at today. I didn't do that this morning. Does anybody have any that you would like to take a look at? Please toss them out there. There was a couple. Oh, you know, I did. You know, I posted a couple up there now that I think about it this morning in the chat. Just in the chat. There we go. Hey, take a look at T. I think T is setting up. If you want to be on the long side, T is looking pretty good. Let's see, another one I posted was NEP, NEP. We talked about this one last night, pinball setup, and it's showing a little like it wants to break out a little bit. It's holding up right here at the top. That's one. And a snap. Snap. Might want to keep our eyes on snap. NEP and snap. There we go. All right. Let's see what you guys might have here. All right. Let's see. BJ. BJ's nice looking, Mike. Thank you. I'm going to flag that. Very nice. Look at that beautiful sideways consolidation here. Beautiful. Absolutely beautiful. So now we get to that breaking out point, or even through here, if we were to draw a line, and I'm just gonna draw a line under the T line there, just slightly, just ever so slightly. This is the trade area. Anything down below that line, you might want to question that trade. Anything above that line, that trade looks great. And then, of course, a breakout makes it even better. So, sweet. Earnings, not till November 16th. So, nice one. Very nice. PR. Let's see. PR. PR needs, I guess I really don't know if you're looking at this long or short, to tell you the truth. PR, we've got this top here. We're looking to the downside a little bit. We start to break down through the trend indicator. You're probably going to get into the 50-period moving average here. To be long, I think you're going to have to break out of this candle right there, 15 and a quarter. I don't believe this is a long buy below that. I really don't. I think you've got a double top here, and you've got a nasty bearish Hiromi in here. In fact, this candle's a little bit small. It just means the mice was eaten on the cookie over here, but that is a Oreo cookie setup. So I'm not too thrilled about that. And is PR, is that the one that ConocoPhillips, somebody bought? Isn't that what they bought? Something like that? I could be wrong about that. Could be mixed up on that one. And then SQQQ. Yeah, SQQQ is still bullish. Whoops, a little too much there, Ricky Poo. Yeah, we're still bullish on that. This is now a rounded bottom breakout. And, you've got the trend indicator over the 50-period moving average, the T-line over the trend indicator. So what you've got is some momentum going here. Nice little pullback. Your first area to get through is going to be that 21. I don't know why that's not working. Around that 2160 area. That will be the first area to get through. That's also a very nice target. Resistance is targets. Targets is resistance. So a nice target up there. Let's see what it does, how it acts. And then if we start to break out, I'm going to go to a 2-day chart. Look at that 2-day chart and look at the possibility here. And that's what I'm going to go with. That does not bode too well for the bulls trying to trade, say, the Q's long. Not at all. Here's a 3-day chart. That was a 2-day, by the way. 3-day chart. You can see we're coming up to the 50s there. Here's the weekly chart. Weekly chart is giving us a pinball setup. Yo, daddy-o. There we go. That would be my plan for SQQQ right there. We break out, first target. The 200 is always going to be a target, and then maybe we get up to that 2940 up there. Thank you for that one. I'm going to flag that. Appreciate that. GS short. Shorted that yesterday. Yeah, they've kind of run into a little bit of a problem, haven't they? That is a one of our the bearish pop out of the box down here. That's what that is. Building that nice little box right in there, and let's see. So put that little box around there like that. There's 2 entries that I see, and then after this, I have to call it off today. There's 2 entries. One, inside the box. 2, a pop out of the box would be an entry on that if you're not in it. For anyone that's in it, all you need that thing to do is stay below the T-line and you are golden. Anyway, thank you everybody. Appreciate it. I'll be back here at the bottom of the hour and we'll get going. It is recorded, Thea. I'll post a link here for you. Give me about 1 minute. Okay, 1 minute. I'll post a link out here for you.